What you should know before the 1st of January, 2026 on Nigeria tax matter. Whether you re an employee trying to make sense of your payslip or an employer ensuring accurate payroll deductions, understanding how to calculate tax on your salary in Nigeria can be confusing, especially with different deductions like pension contributions, relief allowances, and tax bans. Hashtag. I have felt this way too. Well, until I stayed in a room with the customer support team, who did a great job at explaining the complexities of tax calculation in Nigeria. It seems all unfair, but when you read this, you will understand more and even feel relieved. Hashtag. I'll break it down step by step in simple terms, making the process easy so you never have to stress about payroll calculations again. First, what are taxes? Taxes are compulsory payments made by individuals and businesses to the government. They can be levied on various things, including hashtag. Income, taxes on personal income, such as salaries and wages. Wealth, taxes on property, investments, and inheritances. Consumption, taxes on goods and services, like sales tax or value-added tax. Transactions, taxes on specific transactions, such as taxes on imports, tariffs. Hashtag. So, everyone pays their taxes one way or the other, but for the sake of this article, we will concentrate on income taxes. Hashtag. Key components of income tax in Nigeria. 4 key elements constitute an employee's income tax in Nigeria, and they are personal income tax, PIT, pay as you earn, pay, tax reliefs and allowances, company income tax, CIT, personal income tax, PIT. This is the tax levied on an individual's earnings, whether from employment, business, or other sources. It applies to all residents and is regulated by the Personal Income Tax Act, PITA. Pay as you earn, pay. This is a system where employers deduct income tax from employees' salaries before payment and remit it to the government. The amount deducted depends on Nigeria's progressive tax system, where higher earnings attract higher tax rates. There's a national tax table for different pay bands, so you do not have to worry about the calculation. Tax reliefs and allowances. These are mandatory deductions that reduce an employee's taxable income. They include the Consolidated Relief Allowance, CRA, pension contributions, National Housing Fund, NHF, National Health Insurance Scheme, NHIS, and other statutory deductions. Hashtag. It is important to note that NHF is not compulsory for private employees, and instead of the NHS, private employees use what is known as Health Maintenance Organisation, HMO, which may or may not be among the statutory deductions, as this is left to the employer's discretion. Hashtag. Hashtag. Company income tax, CIT. While this is a tax on company profits, it indirectly affects employees since businesses must comply with tax regulations, which influence salary structures and benefits. However, CIT is paid by the company, not the employee. Hashtag.